Welcome to Inside Wall Street. Probably never fit the name of the show as good as today. I'm talking with Teddy Weisberg, who is an insider at the Wall Street, I would say that. He's over 40 years at the floor of the New York Stock Exchange, now here on the second floor in our studio. Teddy, nice to have you today.
My pleasure.
Teddy, I'm here since 1st of January. You are here for 42 years. People tell me so much has changed in the last 2, 5 or 10 years. Tell me, did you really had more fun maybe 2 years ago?
Well, I had more fun for a lot of reasons. Of course, first of all, I was a lot younger, but no, there have been dramatic changes on the trading floor itself. Most evident the last 4 or 5 years. Less people, more automation. One of the reasons why you come to work at the stock exchange, I think, is because of the people. I mean, that's part of the ambiance and the fun of being here, and obviously with less and less people, it just kind of changes the whole feel of the institution. But it is the way of the world, whether we like it or not, and so we've had to learn to adjust and change our business models to accommodate more electronic trading, less physical trading. And for us at Seaport, as you pointed out, for me, will be this year 43 years a member of the stock exchange, and Seaport has had a presence on the trading floor for that entire time. We will continue to stay on the trading floor as long as our customers want us to represent them in this environment, but it is quite possible that at some point in the future we too will be gone, simply because there is no reason to be here if our customers in fact don't want us to be here.
And how do you feel now when, an institution of the United States merged with our German stock exchange, honestly?
Change, change is always challenging and difficult. Depends on where you are on the equation as you view this change. I would say, first of all, I have to share with you that I am a stockholder in NYX Euronext. We owned memberships in the old exchange, and those memberships were exchanged for shares in a public company, so we are obviously stockholders. Our firm is a stockholder. I am personally a stockholder. My family are stockholders. So clearly we have a vested interest in this proposed merger from a stockholder's point of view, without question. I view it personally, and as a firm, we view it in two separate ways. Of course, you have to view it as a stockholder, and therefore you will either vote for or against it, and you will make a decision as a stockholder. Is this good for me? Is this good for my firm and my family, or is this bad? And then we will vote either by not owning or owning the stock, or some variation of that theme. The other side of the equation, though, is just the emotional side, because it represents obviously a very dramatic change. It's something on a personal level I thought that I would never see, but then again, a lot of things happen in the world that I thought I would never see. But the world has grown smaller thanks to electronics, and the world of trading has, on the one hand, become clearly international, but on the other hand also has grown smaller because of the ability to trade electronically across borders seamlessly without the need of physical presence, whether it be in Frankfurt, Dusseldorf, or in New York City. So that change is emotionally a little difficult. It's a tough pill to swallow, and one cannot help but wonder, how did all this come about? How did we get in this position? I understand that you add 1 and 1 together and hope you come up with 3 or 4. And so from a stockholder's viewpoint, of course, you hope that is the ultimate outcome. But from an emotional viewpoint, I still sort of question the reason for it all. But, these things are far beyond. Nobody asks me what I think, so these are people that I assume are a lot smarter than I am, and so I guess this merger is being proposed for all the right reasons.
But I ask you what you are thinking. I'm worried about that it could be much quieter at the floor downstairs in the future. What do you think?
Oh, I don't know. Well, I don't know if it can get much quieter than it is. I mean, there's still, there used to be about 5,000 people that worked on the trading floor as recently as 3 or 4 years ago. And now, of course, it's probably less than 1,000. And as I have stated earlier to you, we keep a presence on the trading floor not for emotional reasons. We keep a presence on the trading floor because we still have institutional clients, some of whom are in Germany, who want us to be there, to be their eyes and ears on the trading floor. But quite frankly, if they say to us, Teddy, we no longer we will continue to do business with you, but we don't think that your presence on the trading floor is no longer necessary, then we too shall leave the trading floor. For us, it's strictly a business decision. It's not an emotional decision. We have a business to run. We diversified our trading interests away from the trading floor 25 years ago. We have a whole trading desk in Lower Manhattan where we have traders and all the electronic connectivity. In fact, it is really just a duplication of what we're doing on the trading floor. It's not necessarily the direction we wanted to go in, but as business people, we had no choice, and we did not wait till 5 years ago, but we actually made that decision 25 years ago. So we are perhaps luckier than most. In terms of the firms that have had a long history on the trading floor, because we have prepared for this transition, if you will. If you said to me, Teddy, but where would you rather be? I would say, absolutely, I'd rather be on the trading floor, but I don't want to be on the trading floor by myself. And at the end of the day, we have a business to run and clients to represent, and so we just basically... for us, it's a matter of staying between the client and the ultimate execution, and physically, it really doesn't matter where we do that.
So many broker firms merge at the floor downstairs. The one booth became Kellogg a few years ago, then it's called Knight. Will the consolidation in this industry go next?
Oh, well, I think there's been tremendous consolidation in the industry, but there's always consolidation in the industry. I could go through a litany of 50, 100 firms that were brand names 25, 30, 40 years ago that no longer are in existence today, yet have transitioned or merged or been bought out, whatever the case may be, by other firms. So the bones, if you will, of these firms still exist. Just the names change, and people come and people go. But consolidation and change is just a byproduct of the world that we live in. Just the fact that we are considering a merger of Deutsche Boerse and the New York Stock Exchange underscores that whole concept. It's not something that we at Seaport really think. I mean, we don't think about merging or consolidating. Perhaps we're either dumb or we're lucky. But it hasn't necessarily been a need for us from a business point of view.
And what do you think about the equity market itself? We see so much crisis. We see Libya, Egypt, Israel, Japan, but the market is back at the level before the earthquake in Japan. So it seems that, the Dow Jones one not really to go down. What do you think?
Quite amazing, right?
Yeah.
Yeah, I know. I think it's got a lot of people, myself included, scratching my head and pulling out what little hair I have left. It's a very, very strange, if not interesting time in terms of trading, because I would agree with you that all the items that you point out, all the issues that are going on in the world, all the really serious problems that we, whether in Germany or in the U.S., are faced with, whether it's geopolitical, political, economical. I mean, the world is kind of being turned upside down before our very eyes, and it's almost every day we are faced with a new crisis. And yet, through it all, the stock market, though we had a little sell-off a couple of weeks ago, started with the original Egypt problems in Egypt, where we were off 160 points that one day, but the following trading day, which was a Monday, the market actually was up a little bit. And I don't know if we've all become very calloused and so cynical that we tend to view these events through the eyes as investors as just events. You know, it's almost like we're watching a sitcom on TV, but the reality is it's real life. And there seems to be a disconnect between what we see, what we read, and the news cycle, which doesn't seem to last much more than 72 hours, and then we're on to the next event. And we know that historically that investors and traders tend to reduce things to their lowest common denominator for trading reasons, you know, not necessarily for social reasons. And I think you can make a much better case for selling equities currently than for buying equities, simply because there are so many unknowns. And the stock market traditionally has great difficulty in dealing with the unknowns. On the other hand, putting all of that aside, which is sort of logical, I hope, the tape never lies. The tape never, ever lies. You can argue with me about that for 6 hours, and I will come back to that same simple statement that the tape never lies. And the tape being the stock exchange ticker, the tape is telling us that the stock market actually wants to go higher. I have no logical explanation for you, except that history has taught me that never fight the tape.
Never fight the tape. We don't have 6 hours time, but we have a little bit time, and you have so much experience, Teddy. What are your advices to the investors right now?
Well, it's a case of do as I say, not as I do, because I'm a bit like a deer in the headlights myself at the moment, because I too am concerned about all the events that are taking place in the world, and I too can find a better reason to be at least cautious here, as opposed to being a little more aggressive in terms of equities. I don't have nobody has a crystal ball, and I do truly believe, all kidding aside, that we're sort of sitting on the head of a pin at the moment, and I think the market could actually flip-flop either direction. I think we are on the cusp, hopefully not, but we could be on the cusp of some kind of event-driven market. In other words, something really dramatic happens in the world, which nobody really, can anticipate, which could be a very big negative for the market. But that aside, and accepting the fact that the tape doesn't lie, what we're doing is we for ourselves and for our customers, we are basically number one, gravitating to large cap companies, which is not a terribly original thought, but we do that because we figure that at least we want exposure to the equity markets, but we want to be in good companies with good balance sheets that pay good dividends. In the event that we are wrong, at least we know that if you own good stocks, even if you're wrong, your timing is wrong, that eventually, those stocks will represent good investments. So that's first and foremost. We focus on the energy area. We focus on agriculture. People have to eat. Emerging markets. The first thing people do when they start to have a better economy and more money in their pocket, the very first thing they do is they buy food. So we want to have exposure to the agricultural sector. Now that could be like with a John Deere or a Caterpillar tractor, or it could be with farming groups. Potash. Everybody can kind of pick their own poison, but I think you want to have exposure to agriculture. You absolutely want to have exposure to energy. Whether it's natural gas or whether it's coal, it could be alternative energies, solar, but I think just plain old energy, oil and gas, drillers, because clearly if we don't realize now that we have eventually huge issues with the Middle East, because the Middle East, no matter what gets resolved today or tomorrow, the effects of what is going on today we'll be dealing with for years and years to come. I'll be long dead. You'll be dealing with it long after I've left this earth, because this problem is not going to go away, and the world needs energy. Whether we like it or not, the world needs energy, because energy is what drives the world's economies. So you definitely want to have exposure to energy. And in the U.S., I don't know about Germany. In the U.S., we like some of the transportation stocks, like some of the railroads, which we don't have a lot of competition and are basically energy efficient in terms of moving goods and services. I mean, it's not a new concept. The stocks have unfortunately had have had pretty big moves, but I think on any weakness, it's probably an area where I would like to be involved in. And lastly, we tend to like the big chemical companies, the large chemical companies, because it's the chemical companies that will basically feed the industrial world in terms of what they need as a catalyst to develop their businesses and make new products.
So now some branches, they're interesting for you. Teddy Weisberg, floor trader at the Seaport Securities. Thanks very much for joining us today.
My pleasure.
And thank you very much, ladies and gentlemen, for watching. See you soon at Inside Wall Street.